All right, so I'm very excited to start the most exciting panel of the day about Bitcoin staking and DeFi. Please give a round of applause to these guys, Just a quick background on my personal journey in Bitcoin staking is that I'm sure some of you will relate. 2 years ago, David Say asked, we are doing a panel and conference in Paris in our office, and he asked to pitch Babylon. And he talked to one of my colleagues, thanks, about Babylon and Bitcoin staking. And my colleague got very angry. He was like, what the heck are you talking about? You can stake your Bitcoin, this is a scam. And then I talked to David, read the white paper, understood he was an amazing professor and entrepreneur, and I understood it was a serious topic. Then 6 months further, Mirko from Staking Rewards told me, well, it's more than a serious topic, it's the most interesting opportunity in the staking industry for the coming years. And since then, 2 years ago, in Istanbul, Staking Rewards, Staking Summit, I don't know where you are, Mirko, but thanks again. We've been building and investing in Bitcoin staking as Kiln, one of the leading on-chain yield platform, and working with Lombard, working with, of course, Symbiotic, and of course, Brendon and CoreDAO. And maybe last point of data, if you look at the TVL that has been flowing into staking and Bitcoin DeFi since the beginning of this year, it's booming, it's coming. All of our customers are asking for it, and sometimes very institutional customers. So I want to take time because we have 4 of the best founders, experts in the Bitcoin staking or staking space here. Let's start with you, Jacob. Can you please introduce yourself as well as how Lombard is building around the Bitcoin staking space?
Yeah, definitely. Thanks for the introduction. Nice to meet everyone. I'm Jacob Phillips, one of the co-founders of Lombard. Lombard is a Bitcoin liquidity protocol. We are sort of a Bitcoin bridge, and we've launched a sort of one of the first, the most notable Bitcoin liquid staking token. So yeah, I think we're at like 1.7, 1.8 billion dollars in TVL. You can use LBTC in all of your favorite DeFi protocols. Sort of the only one that's maintained peg and distributed well throughout DeFi. So yeah, staking has been quite a catalyst, I think, to drive Bitcoin adoption. And we're just beginning to see the ripple effects.
Thank you. Alexei.
I'm Alexei. I'm the co-founder of Bob. Bob is a hybrid L2 that connects Bitcoin security with all the best things you have on Ethereum so that you can, well, put Bitcoin to work in DeFi. We're core contributors to BitVM. You've heard about this just before, right? It's a trust minimized way to actually get Bitcoin into DeFi and also contributes to Bitcoin security. And we are actively working on adding Bitcoin security through staking to the hybrid design, and have also become one of the hubs for different Bitcoin LSTs to be utilized in trading, lending, one-click staking, one-click DeFi deployments. So basically, if you want to use your Bitcoin in DeFi, Bob is building the tool suite for you to just have the best possible experience.
Thank you. Brendon.
Right on. So I'm Brendon. I'm one of the initial contributors at Core. We're a leading Bitcoin scaling chain. So it's an L1 that's fully EVM compatible, meant to be the home of Bitcoin DeFi and use cases for Bitcoin on chain that aren't currently possible on Bitcoin. We also have this novel consensus called Satoshi Plus that has a Bitcoin staking component. We were the first to launch Bitcoin staking at the protocol level roughly a year ago. I think we announced at Dubai last year. So there's about 7,000 Bitcoin securing core, growing, and I think we're going to talk a lot more about that today, but super excited to be on this panel with these awesome Bitcoin folks.
Thank you, Brendon. And my old friend, Felix.
Thank you, Laszlo. Yeah, I'm Felix. I'm the head of ecosystem at Symbiotic. Symbiotic is a universal staking protocol, so basically it's highly flexible and modular infrastructure to build staking networks or other use cases that require slashing or rewarding token holders for putting up the collateral. And as Bitcoin is one of the prime collaterals in the crypto space, obviously, we're also very focused on making those Bitcoin useful and providing actual use cases to secure chains or other infrastructures. So yeah, excited to be here with all these teams. We're working with some of them, like LBTC is one of the prime collaterals on Symbiotic already and growing. So yeah, really excited to see what we're gonna discover here today.
All right, thank you guys. So the first topic I want to discuss is liquidity fragmentation, because some of these staking and DeFi Bitcoin ecosystem is being on different platforms. It's Babylon, it's CoreDAO, Botanix, or EVM type of wrapped Bitcoin staking. So Jacob, how do you think of this fragmentation, and how is Lombard helping to solve it?
Yeah, it's a good question. So I think within the Bitcoin staking space, there have emerged a number of different opportunities, and I feel like, from Lombard's perspective, we've always sort of focused in on one core opportunity, which was Babylon staking, though I think Brendon and I need to have a much deeper conversation here. So while there exists some fragmentation, I do think it's been like, the rise of Babylon is just the start of the fragmentation that's going to happen in the Bitcoin staking space. So there are a couple of opportunities right now, because this has become such a hot opportunity. I think that the opportunities are only going to multiply. So, Bitcoin will find its way to stake no matter where it goes. But, on the fragmentation side, I think the more interesting fragmentation that's happening is actually like one layer up. So, Babylon and Bitcoin staking has been this incredible onboarding mechanism for bringing Bitcoin out of cold storage, starting the on-chain process of Bitcoin utilization. And from there, you've seen Bitcoin wander to 10 different Bitcoin L2s and 15 different existing ecosystems, and that has started a process of fragmentation that now becomes into aggregation a little bit. So I think Lombard kind of sits in the middle of all this as like sort of one center point for liquidity to flow into. We then aggregate across different staking platforms, and then ultimately distribute liquidity into these different ecosystems. So while maybe we've been an aggregating force in the staking ecosystem and a fragmenting force in Bitcoin DeFi, I think over time, there's like a lot of experimentation happening within all these different platforms and ecosystems. All of this is going to converge down to some power law distribution, right? Probably 2 or 3 staking protocols win, and 2 or 3 DeFi chains happening. And I'm sure Alexei and Brendon have better thoughts on this, but in all of DeFi, there's only like a couple chains where real innovation is happening. So it feels like that's probably what's going to happen with the Bitcoin space. All the liquidity flows to wherever the innovation is.
I agree with that view. Alexei?
I mean, you've basically already made the point. I think, the fragmentation stems from different opportunities. And if you look at any other financial product, like even for the dollar, for stablecoins, you have so many places where you can put them to work. It's no different for Bitcoin. I don't think fragmentation in staking per se is an issue. In fact, if you look at Bitcoin, Bitcoin only exists on the Bitcoin blockchain. The moment you deposit it into an exchange, it's no longer L1 BTC, right? You've wrapped it. We don't see it and perceive it this way, right? We have this very strong distinction between, I'm wrapping it to a chain where I'm staking it in something, or I'm just using Bitcoin on all of these platforms, exchanges, Cash App, whatever. But actually it's the same, you're depositing it into something, and we've never talked about fragmentation of Bitcoin between Binance, Kraken, Coinbase, OKX, and now we're talking fragmentation between all different staking mechanisms. I don't think it's really a big difference there. Ultimately, people are going to use their Bitcoin where they want to use it, and the more opportunities you have, the better it is for everyone, because they will cater to different user bases, have different go-to-market strategies, maybe even different geographical focuses, and that just helps us activate more Bitcoin. So I think the fragmentation isn't really an issue. It's rather, okay, if I want to, how do you abstract it for the user? How do you hide the complexities of the different staking mechanisms, the different ways to kind of get your Bitcoin into a DeFi position? And that's something we've been working on, actually using Bitcoin intent. So the things that you see on Ethereum where you just say, hey, I want this on that chain or whatever, on that protocol even, and I don't care how I'm going to get my assets from this thing to the other chain, just do it for me. This is now available on Bitcoin, and it just helps users focus on the product. Like ultimately, why does a retail user care whether this staking product is on Bob, Core, Babylon, whether it's powered by Lombard or something else? Ultimately, it's important to us. But for the retail user, they just want the yield. So ultimately, I think the competition will not only be on on the quality of the product, the trust, but also the accessibility and how easy is it for me as a user to just one-click deploy. And that's where we need to focus, I think, our efforts to solve this kind of fragmentation issue for the user. But behind the scenes, I think it's actually good that you have different opportunities. If there's only one and it breaks, that's not great. So I think that it's good that you have different options emerging.
Yeah, I agree very much with that. The 95% of the end user won't care about CoreDAO, Babylon, Lombard. They will need to have a safe and super abstracted, easy yields to access. So if we solve that problem, that would be great. Brendon, what's your view on fragmentation?
Yeah, I don't have I think these guys touched on a lot. I think for the way we're thinking of it, it's just we're so early in terms of unlocking Bitcoin, bringing it on chain, bringing yield to Bitcoin that I don't think we even think about fragmentation yet. I think a lot of the focus is on Bitcoin use cases on chain and real products that are going to bring more Bitcoin on chain. Because right now it's just very, very small. I think the biggest opportunity is like the Aave wrapped Bitcoin market, which has like 4 or 5 billion, and that's paying out like 0.02%. So I think before we're worried about fragmentation, it's about sustainable yields and products that actually provide value where people can put their Bitcoin to work on chain. And we're trying to back that with core ventures and partner with great builders, but I think that's the focus. And then you'll naturally see these kind of Bitcoin-denominated ecosystems. A couple are going to win over the next couple of years, and I think the liquidity will consolidate over time where the best use cases are. So that's kind of our view. I think it's just really exciting. We're in a moment where everyone's just solving problems, hopefully for Bitcoin holders, and we got a bunch of different variations on that right now.
That's right. Only less than 0.5% of Bitcoin are staked today, so we're still very early days. And
and on chain, and staked and just brought on chain and doing something. So I think that we're going to see a lot of great opportunities there with real yields. Yeah.
Felix, how do you tackle the fragmentation problem? What's your view about it?
Yeah, I think I agree with what the panelists brought up. I think one core thing that we're focusing on is actually providing these real use cases that can generate yield that is not just based on speculation or initial sort of incentives given from these new BTC-Fi projects that sort of bring the Bitcoin originally on chain. And because we're like this modular protocol and have like the slashing features and a very programmable environment, we can, like on Symbiotic side, help provide like Bitcoin as a collateral to use cases that need these features, versus some other mechanisms that might be more limited in what they can actually bring to the demand side of the equation. And so I think that will matter a lot. And like you were saying, Brendon, right, in the end, that will be where the fragmentation maybe stops, if like the use cases will sort of aggregate the winning ones, right? So, and we're still very early on this journey. I think it's great to see. I think there was like an earlier part of a Bitcoin DeFi ecosystem with TBTC starting like a few years ago, and it never really took off. So it's really great to see now with BitVM and some of the other innovations that this kind of push is coming back and more is happening. I think for now, a lot is driven by speculation, and I think on our side, we're trying to like help bring the actual use cases in that can help generate yield. And for sort of the Ethereum ecosystem or other infrastructure projects, Bitcoin is a great collateral. So that's where I see then the yield partially at least coming from, or maybe also insurance use cases. We've kind of discussed it briefly in the room before we came in. So yeah, there's
is there an announcement you want to make? No, okay.
Not yet.
Not yet.
Working, doing
okay.
the BD magic.
You'll have to wait. One topic I want to deep dive in is this. Some of the criticism of Bitcoin staking, where we all agree that Bitcoin is digital gold, and as we build mechanism to make it staked and liquid staked, Jacob, I want to get your view on that. How do you respond to criticisms as like this might hurt Bitcoin core capabilities and value in the first place?
Yeah, I never really understand the thesis that this is somehow bad for Bitcoin. I mean, if Bitcoin is all built on a monetary premium, right now it's losing the battle of money in DeFi. Now we are taking Bitcoin and making it the most accepted collateral within on-chain finance. It kind of sounds like a no-brainer. Like, it would be really weird if Bitcoin won the off-chain collateral game but lost the on-chain collateral game, especially if everybody here thinks that on-chain finance is going to one day grow to be much bigger. So all of this is like, increasing the value, I think, of Bitcoin as this digital gold. Like, that's all it does. And I mean, everybody on stage here, in one form or another, is with the thesis that Bitcoin is going to move off Bitcoin L1 into some other environment, whether it be Bitcoin-focused ecosystems or other ecosystems, and it's probably going to stay there. A lot of it will never go back. And in fact, that's the only way Bitcoin as money really scales.
Yeah, I agree. Why would we wait to have off-chain yields who are often opaque, not decentralized, to get yield on Bitcoin? Very much agree with that.
Well, and I think, I'll pass it over to Alexei after this, but he made the great point that Bitcoin already exists on L2s. They're just centralized servers on your favorite centralized exchange. Now that people are finally, creating robust on-chain mechanisms for this, ideally that replaces those things, right?
I mean, to be fair, I've never heard this criticism before. I deal a lot with, Bitcoin Laser and Maxis. I used to be one of the people that get uninvited from conferences like a few years back because they were doing bridges. Now everybody, wants BitVM. I think like people who, say, oh, liquid staking is bad for Bitcoin, I think it's a narrative thing, or it's maybe just, trying to go for attention of people, because it makes absolutely no sense. Like that statement by itself, like, oh, liquid staking is bad for Bitcoin, that you don't have any ground to stand on, right? I mean, Bitcoin is being used by anyone however they want to use it. That's the whole premise. Now, if I want to use my Bitcoin on a centralized exchange, I can do that. I can pick my risk profile, I can put it on Binance, OKX, and that's great. But if I want to use it in DeFi, like many people do, and we have proof of this, there's a lot of Bitcoin already in DeFi. Yes, it's still centrally wrapped, but still, it's more transparent than centralized exchanges. Yes, the wrapping is centralized, but then everything else afterwards is decentralized. And liquid staking just gives you another tool and actually makes Bitcoin much more powerful. And I would argue it's actually very good for Bitcoin. Why? Well, because Bitcoin has always struggled with use cases, and we can say, well, Bitcoin is just there to be digital gold, but I'd argue that, if 10 years from now, I have to go to my bank and ask, oh, could I please move my Bitcoin? Then it's not Bitcoin anymore. Then we've failed. Like, you have to have a way to use Bitcoin and DeFi without asking for permission, and that's what we're doing here. That's why staking is being built. That's why BitVM is being built. That's why we're then tokenizing these things, liquid staking assets, to build DeFi around it. So, no, it's not a bad thing. It's a good thing, and I'll go and fight everyone who ever claims that liquid staking or staking is bad for Bitcoin. Staking is the one thing in crypto that has PMF very clearly. It's easy. You have an asset, you like it, you want to have more of the asset. One click, stake. Why is that bad for Bitcoin? So I would argue that we already have these things in a centralized way with intransparent yields where people have lost money. Now there is an attempt, and a big ecosystem attempt, to make them more transparent and decentralized. So, if you're criticizing that, well, then you should be criticizing yields or any form of kind of, putting assets to work overall. And then, well, what are you doing in crypto?
Brendon, do you want to add anything to that?
Yeah, I'll just quickly add a couple points. I mean, it touched on a lot of great stuff. So just another point is that I think it just enhances the use case of Bitcoin, because if you think of institutions or folks holding Bitcoin in custody, it's actually a negative carry asset. It costs you money to hold Bitcoin, and no one wants to sell Bitcoin. So if you can add some sort of native yield that's sustainable through block rewards such as Core or Babylon, or these unique hash time lock staking mechanisms, it's real yield, not some sketchy centralized lending market thing. That's a great way to get some yield, and it changes the economics of everything. Whether you're a TradFi institution that's offering structured products based on these yields to investors, or on-chain money markets, it just changes absolutely the economics of everything. So I think it actually enhances Bitcoin, and you're going to see folks wanting to hold the LST. So if you're a market maker, if you're an insto, if you're a retail user, you're just going to want to hold the LST. You're going to want to use that as your collateral asset, as it's accruing yield, and you're going to want to borrow stables against that, because it just makes economic sense, and it just enhances the asset that much more.
Couldn't agree more. Felix?
Yeah, I think, I don't really see that argument either, because like Bitcoin as an asset doesn't have really governance rights or something in the process of Bitcoin governance on chain. So normally the argument is that if the LST is held by this organization that controls a lot of the supply by being more capital efficient, and then can control the governance of the underlying chain, if it has on-chain governance, that might be a problem, but I think in Bitcoin's case, that doesn't really exist. So yeah, what the other panelists said, right? It just enhances the financial properties and creates like a DeFi economy around Bitcoin, which is kind of what you need. Otherwise, yeah, it's not a great asset.
And as we have 0.5% of Bitcoin used in staked protocols or DeFi, and we get maybe to 10, 20% in the mid or long-term future, do you think Bitcoin will turn into a proof-of-stake chain at some point, or?
No.
Yes.
Brendon, you don't want
it's
to?
important to distinguish here between the staking that we're building on top of Bitcoin today, which says you take Bitcoin, the asset that is secure by proof of work, and you use it to secure other things, versus we're changing Bitcoin's consensus. That's not happening. Like 100% no. Like Bitcoin's proof of work is why Bitcoin is so valuable. It's secure, it's scarce, it's slow. That's the whole purpose. It works. You don't change a working system. Like, we've talked to dozens and dozens of big Bitcoin whales, LPs, Bitcoin OGs. What is the one thing they value about Bitcoin? It's that it's predictable. It doesn't change. They know exactly what it's going to look like in a year, in 2 years, and 3 years from now, which you can no longer say about Ethereum, and that's why Ethereum lost the fight, challenging Bitcoin, for as money. Like, everybody who challenged Bitcoin for the position as money has lost. So no, I don't think we will ever see, or not in the foreseeable future, not in lifetimes in terms of crypto companies, Bitcoin upgrading to proof of stake. That's not happening.
Okay, and not changing Bitcoin is actually the core value, so no transition to proof of stake. You hear it, huh?
I think there is some potential maybe that, I don't know, some overlay network attests to the consensus of Bitcoin. Maybe it's like a sort of hybrid over time. I could see that happening, of course.
Yeah, I do at least think it's cool that maybe because of the instantiation and success of these Bitcoin staking protocols, for the first time, there's at least some like 50-year, or maybe not 50 or 20 or 50-year roadmap to thinking like, oh, maybe Bitcoin will become proof of stake. In the same way that the success of early success of Bitcoin L2s maybe is paving the way for broader adoption of opcodes that would lead to greater expressivity. So maybe it's like the start of a very long-term roadmap.
Interesting. Conscious of time, I want to understand who are users today, and where are the institutions, right? So that's a big word. We're listening in crypto. Institutions are coming. So, Jacob, let's start with you. Who are Lombard users, and our institutions are already using your product?
Yeah, Lombard users are a mix of folks. There are, I mean, you got to think about it in this way. Like, Babylon is maybe a 6 or 8 month old staking protocol. Lombard's been around for, kind of the same time period. So these are very much early adopters of new protocols using this at this time. So big retail brace, crypto native funds have jumped into this because they've already been staking ETH and staking on EigenLayer. They're familiar with these kind of platforms. And then I'd say we've for sure broken into the sort of crypto adjacent crowd. Family offices and people who maybe this is, maybe they're staking some ETH, maybe they've been thinking about staking, or at least they're familiar with the concept. Guys like Kiln going around doing the Lord's work of education of this space. So these are the types of people you're able to onboard. I think we are cracking some of the, more Bitcoin maxi or non-DeFi users, but I think at this point, this is still like a game we're trying to bootstrap. So we've definitely broke into anybody within the crypto crowd, and now we're sort of trying to, cross the gap into more maxi types and institutions. And definitely the one piece I feel that has been missing on the liquid staking side has just been the integration of qualified custodians. This is a deal breaker for a large number of regulated institutions, and something that's going to change real quickly.
I agree. It's coming. Alexei, users and institutional adoption?
I mean, I think we're on a similar boat here, right? So Bob is actually turning mainnet-wise 1 year on 1st of May. And, we've had a broad mix of users, but then, the one thing we know with Bitcoin is that a lot of people are institutionalized at this point. A lot of big Bitcoin holders do not hold their Bitcoin in their paper wallet or the ledger. They use institutional qualified custodians. which is why Bob has been actively working with Fireblocks, Kobo. There's another big one we're going to announce very shortly, to make sure that institutions can deploy their BTC into DeFi, make that accessible, and also working with like big tier 1 protocols like Uniswap, Euler, where also in the final stages with Aave, that's, there's all this long, big governance process where there's been lots of interest to, bring more Bitcoin use cases to these tier 1 big OG DeFi players. But what we also see is gradually, slowly but steadily, more and more retail users, in the sense of people who have Bitcoin, who are looking to, try like one-click deploy something, get some yield. They usually are not the people who will go to our interfaces, our websites. They will come through the neobanks. Like, there's a Latin American, European, Southeast Asian neobanks that have Bitcoin cashbacks, credit cards that give you Bitcoin if you spend, and you can then do something with. So there's a lot of these things, a lot of players that have been working on the edge of fiat and crypto, usually with Bitcoin, and they're now looking to do something. And that is essentially where we see, users start trickling in, and once the floodgates are open, you're going to have millions of users start basically playing around with these things, because they won't know that they're using platform X, platform Z. They just have their mobile app. Oh, I have Bitcoin, and we're all trained to look for yield, to get some % on our savings, and why not for Bitcoin? So that is something that we've seen happen over the last couple of months. It's very fresh. But the market is immense, and that is the retail usage that we all want to pair up with institutional capital, because that is how you create a long-term sustainable market.
Brendon.
Yeah, I'll be pretty quick, just to be mindful of time. So I'll just focus on instos, because we're talking a lot about that. So we agree, lots of Bitcoin there, a lot holding it in custodians. We're launching an LST called LST BTC in conjunction with Maple Finance. Our minting partners are BitGo, Copper, and HexTrust. How that's going to work is basically you custody Bitcoin in BitGo. You can mint LSD Bitcoin, bring it on chain, or just hold it, and it's going to have a target yield of 4 to 8%. Basically, your funds stay in custody with BitGo, and Maple is going to run an SMA. So they're basically managing your funds, managing the dual stake positions. So in that, you stake Bitcoin Core, you get higher yields, and they're going to manage that all for you. And there's already 1,500 Bitcoin in the strategy in a beta right now. Lots of interest. But what's interesting is that product specifically targeted just at institutions, right? You can only mint and redeem in custodians. It's a product that it seems to have found fit thus far with those groups, and we're super excited about it. So the actual LST will launch in about a month, but you can already deploy into this strategy with Maple. They're just kind of slowly scaling it up. So we're very bullish, I guess, to say on institutions for now, and then eventually we'll see that trickle down to retail, right? You'll be able to do this maybe in exchanges, wallets. You'll be able to mint and redeem there, but the focus right now is on trusted custodians.
That's super exciting. An institutional liquid staking token and protocol that is being launched on top of CoreDAO. Felix, your users and institutional adoption.
Yeah, so I think many of the users on Symbiotic, I guess in many DeFi protocols, like from my experience now, it's not true that people are like sort of maxis and just use their chain, right? But actually most of the active crypto users like sort of are active across chains. I think, yeah, basically like Solana, Hyperliquid, Ethereum, people use all these three. And like I think now the Bitcoin, the people that use, especially also Symbiotic or other more advanced, let's say DeFi, Bitcoin staking, are probably some of those same user base that just also holds Bitcoin. But there are, hopefully, probably you guys know more about that, like other users coming on chain through these products now and starting to use the DeFi ecosystem that otherwise wouldn't have gotten into it. So very excited about that. But I think largely, so at least from my perspective, it's still those core users that are like kind of familiar with those products and just say, hey, look, I can now also make yield on my Bitcoin, so why not do it? But yeah, so that's kind of my current view.
As we are soon to be over time, I want to have like a very quick from each of you thought about Bitcoin staking future. You can give me a number of, you think, how much Bitcoin in percentage will be staked at the end of the year, 2 years, 5 years. So one quick thought, Jacob.
Yeah, maybe the most notable thing I can say here is that I think the concept of Bitcoin staking will evolve. Felix alluded to this earlier. Right now we think about staking in a very narrow context in Babylon, in the case of Babylon or Core, to secure consensus. But over time, I think staking will more and more become an economic concept rather than just a technical or a security concept. Yeah, that's probably where this is headed. And yeah, maybe I'll pass to Alexei.
Very good point. But to look at the technical side, I think with BitVM emerging, you'll have secure ways to not only bridge Bitcoin but also improve staking security. That's obviously one very interesting aspect that we will see probably go live, like BitVM itself by end of this year. But who knows? Maybe we'll have some early staking mechanisms integrated into that already from day one. And the rest, I mean, honestly, security is cheap. I think moving into economics and looking for long-term sustainable ways to generate returns on Bitcoin is super important. And I do think that we'll see a lot of different design mechanisms evolve, just given the sheer demand of BTC looking for yield. And it's not always going to be like, oh, lock it up and secure a chain. I think there's going to be a lot of new things and a lot of nuance added on top of that.
Yeah, real quick, I think we're in a world of this is going to drive hyper Bitcoinization on Wall Street and on chain, because you have native yield for the first time. And in the first question you asked, we've got a lot of builders trying to build Bitcoin use cases and things you can do with these LSTs and just wrap Bitcoin derivatives. So, I think not only will there be a lot of Bitcoin staked, it'll be the dominant on-chain asset. I think it'll dwarf Ethereum very soon, not only on Bitcoin-focused chains like Bob and Core, but on all chains.
Felix?
Yeah, I think, I guess Jacob already mentioned it, I totally align with that, and I think if people consider Bitcoin the better collateral, it will be used widely in DeFi. I do think that probably some of the bridging and how the Bitcoin actually make it to the programmable chains needs to be improved and needs to be more secure, more decentralized. And I hope to see some of those mechanisms emerge, like BitVM and some of those things, so that it actually is a better collateral, because I think at this point some of the security assumptions of the underlying collateral are worse than an Ethereum or others for protocols using the Bitcoin, because you're then also trusting this bridge and other things. So I feel there's room for improvement there. But yeah, I'm excited about that. And then hopefully maybe we even see some novel, innovative use cases coming out of these Bitcoin DeFi ecosystems, because currently I feel the most of the innovation is in Ethereum, right? And maybe Solana slowly coming. But I think if those ecosystems grow and mature, they hopefully will also contribute new use cases to the wider DeFi ecosystem. So yeah.
Fantastic. So I think you heard it today, and the most exciting panel of the day, that's Bitcoin staking and DeFi, and Bitcoin will be the dominant asset in DeFi. And users and institutions are coming and starting to use these products. So please give a massive round of applause to these experts, to these builders that make it possible.
Thank you, Laszlo.
All right. Cool.